This new data from the FOMC meeting completely flips the script for when we can expect our altcoin season. In this video, I'm going to break down exactly what Jerome Powell and the Fed have said and what that means for when we're going to get this altcoin season, which we've all been waiting for. If you like this type of content, smash up the likes. Do not forget to subscribe. Let's get straight into this one because there's a lot to unpack. So we went into this FOMC meeting pretty much flat on the day. Everything was waiting for this FOMC meeting, which we've just had, and since the FOMC meeting we've actually slid a little bit, down 0.4%. If we jump on over to the traditional markets, the Dow Jones is up 0.6, the S&P is up 0.1, and down 0.2 for the Nasdaq. The market isn't too happy with what it's heard, and particularly for our altcoin season, it messes up the script. Now, you guys know the main thing we need to hear from the Fed is, when are we going to get a rate cut, right? When is it you're going to cut rates, you're going to start loosening monetary policy again, and allow money to flow through the system, right? You know, on this channel, we've been monitoring the M2 money supply. We've had a slight inflection up, but until we start getting some of these steep climbs, which we've seen in the past, crypto's not really got the green light to go berserk like everybody's expecting it to, particularly for altcoins. So the main concern was, going into this meeting, everybody had already priced in that we're not going to get a rate cut. And the FOMC did not give us a rate cut, right? The Fed funds rate remained unchanged. But there was a very, very important warning which was shared, and this is around the Trump tariff situation. Now, in effect, I'm going to break down exactly what's written in this report, but in effect, what Jerome Powell is basically saying is we could lose a whole year due to the Trump's tariff uncertainty. In other words, our altcoin season could be delayed for a whole year because of what Trump is trying to do on the tariff front, which is super painful. So we got our, pause. That's a normal language here. The bit I want you to focus on is this. Uncertainty about the economic outlook has increased further. The committee is attentive to risk to both sides of its dual mandate and judges that the risks of higher unemployment and higher inflation have risen. Okay, they've added this sentence, guys. Remember, when you monitor the Fed speak, you have to see what are they changing. Oftentimes, it's just small verbiage that moves the market. This is one example of that. Okay, this is going to upset the market because in Jerome Powell's estimation and the Fed officials, things were going okay. I mean, even if you start here, although swings in net exports have affected the data, recent indicators suggest that economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at a low level recent months, and labor market conditions remain solid. Inflation remains somewhat elevated, right? But we know from looking at the data that inflation was pretty much making good headway. The last reading at 2.4 versus 2.8, we're getting closer to that 2% mandate. And if it wasn't for this Trump spanner in the works around the tariffs, we were hoping that by the next reading and the next reading, maybe you get to 2.3, maybe you get to 2.2, and you start making the case for us getting our trusted rate cuts, which would fuel our altcoin season. But no. Right? No, we could be getting delayed. I mean, the market right now is so confused in terms of the rate cuts that you've got some people at, let's say, Citibank thinking we're going to get 125 basis points of rate cuts this year. And then you've got others at a different bank suggesting you'll be lucky to even get one this year, right? That's how confused experts in the market are right now due to the change around the tariff situation. Now, it doesn't help that leading into this FOMC meeting, Trump dug in even further on the Chinese tariffs, right? He flatly answered no when he was asked at the White House if he was open to pulling back on the steep import duties in order to get China to the negotiating table. In other words, he's doubling down, right? He's doubling down. He wants to make sure that he gets the negotiation deal that he wants. So this is going to add more pain to the market. It's going to add more uncertainty to the market, and it's going to continue to delay the altcoin season, which is what we want to see. Now, again, I've covered off in previous videos the dynamic around, look, even if we're in a tariff kind of period of uncertainty, if it lasts 2 months, 3 months, 4 months, who knows, the rest of this year, Bitcoin can still grind out good results this year, right? Because Bitcoin can move as a defensive stock, right? We've seen that happen in this period. Bitcoin's held up pretty well. You're sitting at $94,000, $95,000 at the time of recording. It's strong. The problem is your altcoins will not move, right? Bitcoin dominance is at records. It's climbing uncontrollably because right now, Bitcoin is the place that money is coming into for crypto, and it's not coming necessarily into altcoins. And you're seeing that. We're at 4-year highs on Bitcoin dominance, and I will not be surprised if this works up to 70. I've called that out, right? And it's just been a steady uptrend. Now, when altcoin season pops off, Bitcoin will continue to climb, but altcoins will climb at a multiple of the rate of Bitcoin, leading this metric to start falling to the downside. That will only happen when risk rotates on. Right now, we are not seeing risk rotate on, okay? We are not seeing that right now. We're seeing the opposite. This market is nervous, it's tentative, it doesn't know what to make of the Trump tariffs, and even Trump doesn't know where we're heading from here, right? So you can see the dollar index has been in decline. Normally that's a good thing, right? We normally like to see the dollar index climb. It means risk is rotating on, but in this case it doesn't. It means people are flocking the US, so to speak. I mean, it's not a huge flocking, but they're selling the US due to the uncertainty around the tariffs, and they're buying other stuff which they deem is more safer, let's say GBP, euro, or yen. That's what this means when this chart is falling to the downside. Okay, so we continue to focus on the fact that, look, it doesn't look like we're going to get a rate cut, but markets will now start to decide, will we get some in June? The percentage here is that, look, we're not, even the market doesn't think we're going to get one in June, right? And then we go further down to July. Does the market think we get one in July? Yeah, the market kind of thinks, 59% of the market thinks we're going to get one in July. But who knows? There's a long time between now and the end of July. More data could come out, more panics in terms of the tariffs, and things will start to cause problems. Now, if you go into September, that's when you start to see that pretty much 1 or 2 rate cuts is being priced in by that point. And then October, you've got a couple priced in. And December is where you can see that most of the market thinks we'll be at 3.5 to 3.75. In other words, we're losing 75 basis points, which would be 3 cuts between now and the end of the year. Again, markets are super spread out. Again, let me just show you that distribution here. There's a huge sway, right? There's a huge sway in between what the markets are predicting here. Some people are predicting that you'll get loads of cuts and end up at 3 to 3.25. Others are saying we're going to get nothing, right? In fact, 5.6% think we'll just get 1 cut between now and the end of the year. So this is all around the tariffs. This is what's throwing us off because most of the market agrees that if it wasn't for this, we've made good progress. The economy is healthy, labor market is healthy, inflation was meaningfully on its way to 2%. Had we have not had this issue around the tariffs, we'd be good to go on rate cuts, we'd be introducing money into the system, all coins would pretty much be flying, right? So when I look at it, I remind myself that, hang on, this tariff stuff, whilst yes, it can drag itself on for the rest of the year, it can also fix itself pretty quickly. It takes one tweet tomorrow, the day after that, for Trump to sit down with Xi Jinping and sort something out and come to an agreement. And this market is ready to explode. Those altcoins, which we've looked at in multiple videos leading up to this one, which are 80% down, 90% down, 75% down, which you had plenty of opportunity to add to your portfolio, I just see them rocketing. I just see risk rotating so powerfully on at that point because this is the only worrying piece of the equation right now is this uncertainty around the tariffs. Apart from that, like I've explained, everything is ready to go. And that is why I'm so focused about making sure I'm in this market right now. This is not a market I want to be out of. I want to be in this market, both on Bitcoin, because of course, if we have a boring year and the tariff uncertainty continues into Q3 and Q4, because look, sometimes these things do take longer to get fixed than we think. Then I've got my Bitcoin. But if the traffic light clears up, if the blockage in the pipeline clears up and Trump manages to solve this stuff and things start to improve, I want to make sure I've got my altcoins locked and loaded. I mean, how silly would it be for me not to have my altcoins locked and loaded when we've had such a period of the price point being so depressed for so long? So very quickly here on Bitcoin, Bitcoin needs to get a higher high, right? It got rejected on Friday from 97.9. I did tweet this. Make sure you follow me at Twitter at RealIjaz01. We need to get a higher high. 97.9 is acting as a tough level. We need to break higher if we want to keep this upward trend. Otherwise, we may need to come back down and retest that EMA ribbon. So, another important FOMC meeting in the bag. A big warning delivered by the Fed to say, look, this could cause us problems. This could make inflation rear its head again. And remember, we've seen this before with the pandemic. They say, oh, it's just going to be transitory. It'll fix itself. Don't worry, inflation will blip up and then go back down again. But if one thing my experience has told me, studying and working in an investment bank, It's that once inflation comes into the market, it's very hard to unwind. It's a very sticky thing. We've seen that. We're still fighting the inflation from the pandemic period, which was 6 years ago, right? 6 years ago almost. And that's what we could see happen with this tariff effect. That's the concern in the market, but hopefully we're ready to go once this blockage clears up. If you enjoy this type of content, smash up likes. Do not forget to subscribe, and I'll see you in the next one.